Yo, what's up, guys? This is going to be the New Age free webinar. We'll be going over how to find your own strategy, what you should look for while you're trading, and everything in between. We're truly giving the most value for 100% free. So I hope you guys enjoy. Nobody does it like this. And yeah, let's get straight into it. Okay, I'm going to share my screen right now, guys. By the way, for whoever stays till the whole entire end, we have another really cool free gift for you guys. Yeah, by the way, we're fully filled out with spots, guys. We're at 500, so that's pretty cool. But yeah, we do have a free gift for you guys for whoever stays to the end. Let's get into it. So, guys, new way trading for you editor. How do you find your A plus trading strategy? As you guys know, trading, it's not like you can just do this and make money or press a button and make money. It's all about having a strategy. Your strategy is everything. And your strategy consists of having an edge and calculating your risk through every single trade. So I know there's a lot of beginners in this live right now. So I'm going to do literally like 5 minutes on what you should do if you're a beginner trader, you want to get into trading, and the steps that you should take as a beginner trader. So if you're a trader and you're looking to start trading, first things first is educating yourself, joining these free webinars, buying Discords, buying courses, watching YouTube videos. What I used to do was I used to watch YouTube videos like, okay, live trading or how to get started trading, stuff like that. And obviously, there are a lot of scummy people out there. But even my YouTube, you should go check out my YouTube, watch beginners, even staring at charts. Like, download TradingView right now and look up, or just literally look up like SPY or QQQ or Tesla or Nvidia or AMD and look up these stocks and just watch them all day. See how they move, because the more you watch them, the more you're going to recognize how they move. And as you watch and see how these stocks move, you're going to be able to recognize patterns faster. You're going to be able to recognize patterns before they even happen. So screen time is super important. And you guys probably aren't gonna believe me, but over the last 2 years, I have watched every single I've watched every single 5 minute candle on SPY and QQQ. Even though I don't even trade SPY and QQQ. Yo guys, is my audio does it sound low or is it good? Yo. You're
You
good?
sound good, PB.
Okay, it's cool because it was showing in my end like it's weird. But yeah, guys, I have watched literally every single 5 minute candle over the last 2 years. You think I've been trading all that time? No. On average, I probably sit at my desk watching the markets 3 to 4 hours every single day, and I'm probably in trades for 5 to 10 minutes. And the average loser trade I'm in for 2 to 3 minutes. Average winner like 10 to 12 minutes. So I cut my losers fast, and I'm barely ever in trades. So educating yourself, guys. And even to this day, I keep educating myself. Like, it's not like it just stops. I still watch YouTube videos. I still watch these higher traders YouTube videos. Like, for example, Umar Ashraf's. I still love his YouTube videos. And it's pretty crazy because he was actually one of the first YouTube videos I ever watched that got me into trading. And now I'm good friends with him. So it's crazy how far things have come. And it's just like it's a real message that you can do anything for your mind to. Because I would have never thought like I would talk to him and be friends with him and follow him and all this stuff, but now I am. So reminder, guys, no matter how far you get in your journey, there's always more to learn, and that's the beauty of trading. That's why like trading is it's such like a man, there's such a low amount of people that can do trading because if you're a trader, you cannot have a big ego. You can have confidence, but you can't have a big ego because you have to always be able to accept that there's always people that are better than you. There's never even a point where you're just going to know it all. Like, I've been a successful trader for over 2 years, and I know probably nothing compared to some other traders. I can probably learn something from all 500 of you in here. I can learn something from every single one of you guys, and you guys can learn a lot from me. So there's always more to learn. Never be closed-minded. Second off, I always get asked, PB, how much money should I start trading with if I'm a beginner trader? First of all, only trade with money that you can afford to lose and be okay with it. So, say you have $2,000 in your bank account. Don't go and put $2,000 all in your trading account because the truth is you're probably going to blow that money. Like when I started trading, I blew over 3 accounts. And the way it happened was like the first account I started with $3,000. I turned it to $10,000. I lost all the money, And then I restarted with $750. And then I took it to like 9 or 10,000. Then I lost it all again. And then I truly locked in on it. So only trade with money you can afford to lose, and only trade with money that if you lose it all, it would be okay. You still be able to, feed your children or, pay the bills, stuff like that. Because the more money you're trading with, what happens is you put a lot of stress to yourself. And when you're trading based on stress, when you're trading with the idea that, oh my gosh, like if I don't make this green trade today, I'm not going to be able to pay the bills. Or if I lose this money, I'm done for. Then what's going to happen is I guarantee you're going to lose the money. It's a 100% thing. You're going to lose the money. And you may say, PB, why? Why? Because you're too stressed about it. Like when I'm trading, I'm relaxed. I know my parameters are in set. If I win, cool. If I lose, cool. It's all part of the game. But what happens is when you're trading with all this money that you can't afford to lose, you can't accept the loss. You can't accept the loss because you're cornered. So that's what I'd say about that. Next, people ask me, PB, should I paper trade to start trading? I think paper trading is cool, but don't just think because you're making money paper trading that you're going to make money real trading. Don't just think, oh man, I turned my paper trading account from $1,000 to $5,000. Let me go put $5,000 in a trading account and turn it to $25,000. No, that's not how it works. The good thing paper trading is good for is backtesting strategy. So if you want to paper trade, like if you're a beginner trader, I definitely say go ahead, paper trade, see how the market moves, see how the market works, see how everything is, how the contracts move, how to do options contracts, stuff like that. But don't just think because you're making money paper trading that you're going to make money real trading. Because when it comes to your hard-earned capital compared to fake money on the internet, fake money in a phone, it's different. And that's the truth. So just because you can make money paper trading does not mean you'll make money trading with real capital. But what you could do with paper trading is find your strategy. So say you do research on these strategies, which I'm going to show you guys how to find your own trading strategy through this webinar. Don't think this is the only thing. We got lots to go over, guys. But just don't think that just because you made money paper trading, you can make money in the real market. What you got to do is view your paper trading account as a back testing account. So what you should do is say, this week, I'm going to test out the PB's VWAP strategy. I'm going to take all the VWAP strategy plays, and I'm going to see what my win rate is. I'm going to see how my average loss was compared to my average win. And I'm only going to trade based on these parameters and see what happens. Then say on the next week, you're going to trade with a MACD strategy or an RSI strategy or a candlestick pattern strategy or a volume strategy or something like that. So never get too ahead of yourself, especially when you're paper trading, and make sure that you know the risks that come with it. Next, building a strategy. So PB, how do I backtest different strategies? What do I do? Backtesting strategies, there's 2 ways to do it. Number 1, you can do it live through a paper trading account. Number 2, you can do it just backtesting. So let me tell you guys what backtesting is. Backtesting is basically like, okay, so say you watch a YouTube video. Say you go after this webinar and you watch a YouTube video on the best trading strategy, right? You take notes on it. You understand how it works. Then what you should do is you should go over the last 20 days of market data or the last month of market data and see, okay, Wednesday, did this work? This strategy hit 3 times. Out of the 3 times the strategy showed to enter, it only worked 1 of the time. So that's a 1 out of 3 win rate. And the one time that it worked, there was a 25% winner and a 10% loser. Okay, I'm not going to do that one. But then you say you backtest another strategy, right? You go, okay, let me backtest the VWAP strategy. For the next week, I'm going to trade the VWAP strategy every single time it happens, and I'm going to do it with the same exact contracts every single time. And I'm going to take notes. I'm going to take notes on 3 things. First thing I'm going to take notes on is how many trades it took for the day. Second thing I'm going to take notes on is, okay, through the trades. So say Monday I had 4 trades. Tuesday I had 3 trades. Wednesday I had 5 trades. Thursday I had 2 trades. Friday I had 1 trade. Monday, what was the win rate with this strategy? Was it a 50% win rate? Was it a 30% win rate? Was it a 100% win rate? What was your win rate with the strategy? And once you see your win rate with that strategy, you need to mark down and say, okay, this strategy has a 60% win rate. Every single time it lost, though, the loss was a 20% loss. And every time it won, the win was a 20% win. That's a one-to-one risk to reward. And I'm going to go over risk reward at the end. But for example, a strategy like that would not be a good trading strategy. Why? Because one-to-one risk to reward, that's not worth it. You need at least 1 to 2 risk to reward to be a successful trader. But yeah, backtesting different strategies is really more or less just going over market data and seeing every single time the strategy would have alerted you to enter and exit and seeing if it worked or not. Next, how do you find your personal trading strategy? So the way that I personally found my trading strategy was through journaling and adapting. So what I did is I just journaled. So I what I did was I did a bunch of research on different trading strategies, right? So I did research on this trading strategy. I just watched videos on trading strategies. Then I tested it out. I personally did it with real money, but you can do it with paper trading, whatever. Just test out different strategies and see which one you like the best. See which one that you think works the best for you. For me, I do the opposite of everybody else, and I make a lot of money doing it. Everybody else likes to buy low, sell high. I like to buy high, sell higher. Why? Because once I get a confirmed trend, I have a higher conviction into these trades. So what you need to do is you need to journal a strategy. You need to journal your trades. So say you tried out a lot of strategies, right? So say you tried out like 3 strategies and you have all the data there since you guys know all the data is back tested, or you can even use a journaling platform. What you need to do is go over every single trade you took and mark down these things. First off, the time of day I took these trades. So did I take these trades at 9:30 a.m.? Did I take these trades at 10:30 a.m.? Did I take these trades at 11 a.m. or what? Then mark down the type of trades they were. So mark down, okay, this was a retest. This was a VWAP retest, or this was a breakout, or this was a fib level, or this was a MACD divergence, blah, blah, blah. Mark down the reason you took that trade and make sure you have all your reasons lined up. Next, line up the setups. So what type of trade setup was it? Was it a VWAP retest, blah, blah, blah? What was it? Then mark down the contracts. Did I take 0 DTE contracts? Did I take 1 DTE contracts? Did I take contracts that were in the money or out the money? And I know, guys, for a lot of you guys in here, this is probably very, very, very confusing. So just bear with me a little bit. Contracts. So when we trade stocks, when I personally trade stocks, I don't actually trade the stock. I trade an options contract based on the stock. And the options contracts allows me to risk a little to make a lot. Because say, for example, say SPY goes up 1%, the option contract can go up 150%. So I don't, instead of me putting in $100,000 to make $1,000, I can put in $1,000 and make $1,500. So if you don't have a lot of money, option contracts are the way to go, and you can only lose 100%. But I have proper risk management with it. I'll do a little bit on that at the end. Next, you want to mark down the time frame. So was this a lower time frame setup? Was I trading this on the 1 minute time frame? Was I trading this on 5-minute candles? Was I trading this on 10-minute candles? Was I trading this on 30-minute candles? Was I trading this on a daily time frame? What was I trading it on? Then you have to mark down, was this trade taken on Monday? Was this trade taken on Tuesday? Was this trade taken on Wednesday? Was this trade taken on Thursday? Was this trade taken on Friday? And the reason you do that is, guys, like this may sound so simple to you guys, what I'm saying to literally just mark down, but let me tell you guys why. Because personally, for me, I found out that Mondays are my worst trading days. Usually on Mondays, I have a 50% chance of being red, compared to Fridays being my best trading days. On Fridays, I usually have a 90% chance of being green. And the reason I found that out was literally from journaling and saying, okay, Mondays, I'm not going to trade anymore because there's a high chance that I'm red. So why would I trade that day? You guys realize that most traders, like not most traders, but the most successful traders that I know, traders that make $10 million a year easily, they literally only trade 3 to 4 days out the month, which is crazy. They only wait for high quality setups, and once they see that setup, they go heavy into it. So guys, once you have your time of day marked down for every single trade, so you're literally gonna have a list and you're gonna say, okay, I took 20 trades at 9:30 a.m. and I took 20 trades at 10:30 a.m. All the trades I took at 9:30 a.m., I had a 70% win rate. All the trades I took at 10 a.m., I had a 50% win rate. So now I'm only gonna trade the trades that I took at 9:30 a.m. Why would I take the other ones? If I have a 70% win rate at 9:30 a.m. compared to a 10:30 a.m., compared to a 50% win rate at 10:30 a.m., I'm going to cut out what's not working and I'm only going to do what's working. So the whole point of journaling is adapting to your strategy based on your win rate. Next, you're going to see the type of trades and setups. So, okay, VWAP retest for me works every single time. But when I try and buy support and sell resistance, I lose every single time. So what are you going to do? You're only going to trade retests. You're only going to trade breakouts and breakdowns. You're only going to trade what's working. So for example, say you marked everything down, right? Let's do some math here. Say you marked everything down and you figured out, okay, I took 20 trades with VWAP retest, right? VWAP dash pre-market high retest, right? And say you took another 20 trades, but these were all buying at pre-market low and selling at pre-market high. So buying low and selling high compared to the opposite. And then say this, you won on 8 out of 20 trades. So what is that? Like a 40% win rate. Say on this, you won on 15 out of 20 trades. So guys, in the chat, which strategy would you rather do? What are you going to do after you journal and find this out? So you journaled and you figured out, okay, I was paper trading these setups and I realized I only win 40% of the time trading buying low and selling high. But when I'm doing VWAP retest, I win 75% of the chances. What trade are you going to only do? You're only going to do the VWAP retest, right? You're only going to do this one because why wouldn't you? It works, you know? So that's the whole point of journaling. And then you're going to see contracts. Like I actually, believe it or not, guys, I know all you guys probably try and trade 0 TTEs and stuff like that. Ask Ellie, ask Flav, ask anybody in my Discord. I don't trade the indexes and I don't trade 0 DTE contracts and indexes. I only trade 0 DTEs on Fridays. And the reason I do that is because I journaled my trades and I realized, oh my gosh, every single time I was taking these contracts, every time I realized that my 0 DTE contracts, my losses were way bigger than my wins compared to 3 DTE contracts. My wins were about the same size, or my wins were a lot bigger than my losses. So what I did is I said, screw 0 DTEs. I'm not trading that shit anymore. I'm only going to trade the farther contracts. Why? Because I have a better success rate. I have a better win rate trading the farther out contracts. And my winners are bigger than my losses. So what I realized is that with 0 DTEs, it was so hard for me to manage my risk. So I stopped trading them. Even though, obviously, in my heart, yeah, they're fun to trade. They are fun to trade. They move really, really fast. But they're not safe to trade. If you want to play the long game in trading, then stop focusing about the short-term adrenaline rushes or the short-term game when you need to be looking at the long-term game. So many of you guys view trading as like, yo, tomorrow's my last day trading ever. Like you guys try and win back all your losses in one day, when in reality, you guys are going to be in the market for the next 10, 20 years. And then stop trading, acting like today's your last day that you're ever going to trade. Stop, relax. You're okay. You have months and years to make it back. And the slower you do it and the steadier you do it, I promise you, you'll be able to actually keep it this time. I personally know a trader, guys. He struggled for 6 years straight. His 7th year, he made $10 million. $10 million freaking dollars. He struggled for 6 years straight. Then the 7th year, he made $10 million. If that doesn't tell you something, I don't know. But let's go on from journaling. Do you guys get why you guys need a journal and how journaling helps you make your own strategy? And just so you guys know, you guys won't be able to copy somebody's strategy word by word. like in thing by thing. Everybody has their own strategy. I don't care what you say. Me and Ellie trade very similar setups, so there are some things we do differently, and that's okay because you will not be a successful trader just trading based on somebody else's strategy. And the whole point of journaling your trades is to find out what is that thing that you do differently than everybody else that works for you. So before we move on, put like a 1 if you guys are good with journaling, and put a 2 if you guys want me to go on from journaling, or if you guys are not good with journaling. So did that help you guys with that a little bit? Okay, ready for the next? Okay, cool, cool. So now you guys know how to journal your trades. Now you guys know that, okay, if I want to journal my trades, then I need to, I mean, if I want to find my own strategy, then I need to journal my trades. So now I want to go over how do you not get fooled while trading? Like, there's all these people that they take advantage of you guys. They take advantage of the retail traders, and I'm a retail trader too. They take more or less the ones in public. So let's go over some rules that once you have your strategy, you must follow. First things first, always stick to your strategy. Stop strategy bouncing. Stop trying to catch every single move. Stop trying to snipe the top and stop trying to snipe the bottom. Because you guys want to know the truth? Real money is made in the middle of those moves. Like, I see so many traders trying to catch the exact move from okay, like I see so many traders trying to do this. Watch my look at the screen, guys. So many traders are trying to buy at the exact bottom and sell at the exact top. But the truth is, this is not sustainable. This is not sustainable. You guys want to see what is sustainable, though? This right here. Trading it from here to here and catching the chunks. So stop trying to catch the whole move from the bottom to the top and instead focus on catching the chunks of the move. Focus on catching the middle of these moves. And I promise you, it'll be so much better for you. So always stick to your strategy and promise me that you guys will not go doing stupid stuff, making stupid trades just because you want to be in a trade. No, you guys realize like the market is a freaking there's so much money in the market, and if you just catch a little chunks, if you guys can are be able to catch chunks and crumbles and crumbs of these moves, you guys can be millionaires not overnight, but you guys can literally be millionaires so much easier. So stop trying to catch the whole move, instead focus on catching the chunks of the move. Next, you need to have a set max loss in. Like for me, when a year, say for example, a year ago, my max loss was $500. So if I took one trade and I lost $500 on that trade, then I'm done trading for the day. And you may ask, PB, what if you see a really, really good setup after and you're at your max loss? What do you do? The truth is, tough luck. You don't take it. You really just don't take it. If you have a set max loss in, it is going to put you in a position to win in the long term. Why? Think about it. If you have a set max loss in, if everyone doesn't know what a set max loss ends, it basically means like, okay, guys, if I get down $500 on a day, I am done trading for the day and I'm closing my position. I am down too much money, and this is the only amount of money that this is the max amount of money that I could lose and not care about. If I lose any other money, it's going to affect me. So by setting a max loss, it's going to help you not go on till, and it's going to help you refresh your brain. So have a set max loss in it because it'll help you not blow your account as well. So if you guys want to start trading, but you guys are scared you're going to blow your account, which at the end of the day, you probably are going to blow at least one account, you have to have a set max loss in. Next. Okay, I'm not going to lie, guys. Like, I'm a trader too. I make mistakes too. This is something I struggle with too sometimes. I tell myself, man, every time I do this, then this happens. Or, man, every time I don't hold my runners, they go crazy. But every time I hold my runners, I get screwed. I'm not gonna do this, blah blah blah. I keep going on and on. Or every time I put $1,000 into a trade, I make $500. But every time I put $5,000 into a trade, I only make or I lose money. Do not do this to yourself. I promise you guys, there is no benefit of doing this. So what you should do instead is tell yourself, okay, Every time I do this, then this. So what I'm gonna do is only do this. Only do the safe route. For example, if you're telling yourself, man, every time I put $1,000 into a trade, I lose, but I win, but every time I put $5,000 into a trade, I lose, then only put $1,000 into the trade. It's okay that you're not going to make as much money because the consistency and base hits is what's going to happen. You guys are trying to go from $1,000 to each trade to $5,000 to each trade. It's not how it works. What you can do is put $1,000 into the trade and slowly scale up. Slowly scale up. That's it. Like if I wanted to, I can trade with $100,000, but I don't like trading with that much money. I don't like trading with it. I don't make as much money. I make more money trading with like 15, 20,000 in my account than I do trading with 100,000 in my account. And that's the truth. That's just because I like trading with smaller account sizes. I feel more comfortable. Also, should have, would have, could have, saying, oh, I should have done this. I could have done this. Oh my gosh. Like, for example, on Friday, I'm not going to lie, I was a victim of this. On Friday, I made $3,000. But if I held for another hour, I literally would have made $32,000. But I don't know why I even tweeted that because I realized that I'm putting the wrong idea into people's heads that you should be thinking like that. Because after you make a trade, you should put it in the past. You should completely forget about it because it truly is in the past. So stop thinking about those trades and stop thinking should have, would have, could have because it's over. There's nothing you should do. And locking in profits is always a good idea. Next, if something bad happens in your life or you're not in the right mindset, then you personally should not be trading. Like, for example, if like somebody passes away in your family or you got a bad grade in a test or something bad happened at work, then you shouldn't trade that day because those are the days that you lose blow your account. Personally, for me, like any days that I wasn't there mentally or something bad happened or even stupid stuff like I was mad or something like that, those are my worst days trading. They truly are. Also, should you quit your job to trade? I'd say no, as you should always have a different type of revenue coming in other than trading because what's going to happen is when you have a different type of revenue coming in other than trading, it puts less stress on you to trade as good. But you might think, oh man, I want to be cornered. I want to feel like that, but you don't. You really don't. So quitting your job to trade is not a good idea. And if you are thinking about it, I would say only do it if, first of all, you've been a successful trader for over 2 years. And second of all, you can lose everything and still have a year of money, a year to pay the bills, just sitting in an account somewhere that you can't touch. So you should always have different revenue sources though. Like if you can trade and work your job at the same time, or if you can trade and run your business at the same time, then that's the ideal situation. Okay, guys, next. How to have an edge and calculate your risk properly. Becoming a successful trader is all about having an edge. Having an edge is so, so important. And the other clowns in there, I'm not talking about edge like that. Not Not like that. Not like that. It's edge meaning like what is your edge in the market? What do you have over the market that makes you part of the 1% compared to the 99%? For me, my edge is the stocks that I trade and how I calculate my risk. So my edge, let me go more into it, guys. My trading edge is all about the stocks I trade and the setups I take. Just so you guys know, I literally trade the same exact setup every single day. Like every single day, I go into the market, I look for the same thing. I look for us to break over VWAP and pre-market high and a key level, and then I wait for us to come back down to it and retest it. And I only trade the strongest ticker of the day and the weakest ticker of the day. For example, say, here, I'll pull it up right now for you guys. I'll show you guys. I'm not BSing nothing. Say, let's go on here, right? Okay. Say I pull up my app, my trading app, right? And I see everything's red, right? Everything's red. So what I'm going to look for is a stock that's red the most. So as we can see, out of this list, we have AMD and Tesla down the most. So what I'm going to do then is I see, okay, sorry guys. Okay, guys, so I'm going to see, okay, SPY is down 0.5%, or SPY is down 0.2%, and AMD is down 0.7%, and everything else is not down much. Like everything else is down 0.10%, 0.2%, blah, blah, blah. What I'm going to do is I'm going to look to trade the downside. I'm going to look to short the weakest ticker of the day. So mark this into your thing right now, guys. Make sure you take this notes. Dash. When you're looking for shorts, find the weakest ticker of the day. Find weakest ticker. You're going to find the weakest ticker. This is my edge right here. I find the weakest ticker of the day. And what I do is I wait for a pop and then I short it. Guys, it's a crazy set, I promise you. For a pop, then short it. And I short it through puts. Next, I do the same thing with upside. I find the strongest ticker for the day. And the way I do this is I just literally look at my list and I see, okay, what is down the most and what's up the most? That's my weakest ticker for the day. That's my strongest ticker for the day. But also I look at the higher time frame setup as well. So I look at the daily time frame and say, is this a good setup? Is there any candlestick patterns? Stuff like that. Then you want to find the strongest ticker of the day and say, okay, let me find dips dash retest and buy those with tight stop losses. So guys, I am running low on time because my partner has to go too. So I'm going to try and put everything in the next 10 minutes. So trading the stocks I trade, that's a big part of my edge. I only trade the weak stocks and I trade the strong stocks. And the way I do that is just by looking through my phone. The setup I take, same one every day. I literally, guys, don't go taking different setups. Just find one setup that you like, one setup that works, and trade that setup every single day. Next, I trade the retest. Ellie's going to go into that. So stay tuned for the speaker that's going to go right after me, and he is going to teach you guys. Like, if you guys think I'm a good teacher, wait until you hear him. But next, let's go over having proper risk management. So, guys, let me type this out for you guys just to get it clear in your heads. And I'm going to zoom it out. The only way trading is not gambling is by having a calculated risk. In gambling, you can't go to the casino and calculate your risk. You can't go to the casino and say, okay, I am going to place $500 on black. And if I, or $500, yeah, $500 on black. And if I win, I am going to make $2,000. But if I lose, I'm only going to lose $200. You can't do that at the casino, but you can do that in the market. So what does that mean? It's all about having a proper risk management. So what you need to do is have at least a 1 to 2 risk to reward, meaning say you put 1,000 or say you put $100 into a trade, right? It means that you're gonna if you lose in the trade, that your stop loss is gonna hit at minus $10. So you put $100 into a trade and you lost $10. Or if you win $20 in that trade. So 1 to 2 risk to reward, meaning you lost 10 compared to winning 20. That is key because think about it. That means you can take 2 losing trades in a row and then 1 winning trade and be green. Next, max daily loss. I already told you guys about that. Second, if you're in a trade and you're up over 15 to 20%, you have to move your stop loss to break even. If anybody doesn't know what a stop loss is, a stop loss is basically a thing you put onto your thing. So it's an order and you can do it manually in your head or whatever. But a stop loss is basically just saying, okay, once I get down to this certain point, I'm going to cut the loss. You have to have a stop loss in every single trade. If you don't have a stop loss in every single trade, then just get out of this live because you won't make it. You have to have stop losses. Next, why you need to let your runners run and cutting losers fast. So let's go into the math of it because just so you guys know, trading is all about numbers. Trading is a numbers game. It really is. Trading is literally a numbers game. So you guys know that every contract, so say a contract's $1, an options contract, right? It really means that $1, that means you're spending $100. So 10 contracts means you're spending $1,000. So say you buy 10 contracts of a stock at $1, that equals $1,000 market value, right? Say you sell 10 contracts at $1.20. So do the math, guys. If you have 10 contracts at $1 and that equals $1,000 market value, and then you sell 10 contracts at $1.20, that means you made 20% of the trade, $1 to $1.20, correct? That means you made $200. So that's a 20% green trade with a 10% stop loss. So if you were to lose in the trade, right? If something were to happen and you were to lose in the trade, minus 10 contracts at 90 cents, right? You would have lost $100 compared to winning $200, right? So this trade is a 20% green trade with a 10% stop loss of a 1 or 2 risk reward. Here's what happens when you let your runners run and properly scale out of trades. So shout out Ellie because he truly helped me with this, but you should never just be fully selling your position, guys. Never, never, ever. You have to let your runners run. And why? It's because it helps your risk reward and your edge so, so much. Letting your runners run can literally be the single reason that you make it in trading because it boosts up your risk reward. So now, say we have to be the same thing. We bought 10 contracts at $1. We spent $1,000. But okay, then we get up 20%. But this time we're up 20%. We only sell 4 contracts at $1.20. And this is actually selling a lot. Like usually it's supposed to be 30%, but this is being very, very safe. You're going to sell 4 contracts at $1.20 instead of selling your whole position at $1.20. Then what you're going to do is you're going to move your stop loss up to break even. So now I cannot go red in this trade. There was a 0% chance to go red in this trade. There's only a chance that I take a small win or I take a big win. And that's how you need to position yourself every single time. Then you sell 3 contracts at $1.35. So the stock keeps running. It keeps going. You scale out another 3 contracts at $1.35. You just made $105 on that one by itself and $80 on that one by itself. So letting your runners run, you just made back that same amount of money and you still have 3 contracts left. So blah, blah, blah. We keep scaling out. We scale out, scale out. That's it. Very, very nice scale out, right? So guys, think about it. Here we had 10 contracts at $1 and then we sold it to $1.20. We made $200, right? Just from letting your runners run a little bit. This isn't even letting your runners run a lot. You just made 36% on the trade, $365 on a trade, putting the same amount of money into it and just letting your runners run a little bit. And this is doing it the safe way about moving your stop loss up. So then let's think about it, guys. That's now 1 to 3.6 risk to reward trade. So just by letting your runners run with a trailing stop loss, meaning the stop loss is moving up with the stock, that just made you be able to lose another 2 trades and still be profitable by winning 1 trade. So by scaling out, now we can win on 1 trade and still make money after losing on 3 trades. That means you can be a successful trader with a 25% win rate, which guys, 25% win rate, that's like you're trying to lose trades. Like an average, you should have a 40 to 50% win rate minimum. For me, I have a 70 to 80% win rate this year just because I only trade high quality setups. Like I actually went on a streak. I went 14 for 16 in the Discord. So it's kind of nuts. Then I took a few losses, but yeah, guys, just from scaling out, your contracts, you literally just you just changed your whole mood of trading. Everything's changed. Risk to reward is everything, guys. Trading is a numbers game, and that's the truth. So that is my half of finding your A+ trading strategy. Now, guys, be ready. LED, you ready to come through and show them how you do it? I'm telling you guys, you're gonna want to stay
Yeah.
tuned. All right, cool, cool, cool. Guys,
Yeah.
LED's gonna share a screen right now. I just made it where you could, Ellie. Guys, he's gonna do it right now. Just it's gonna be crazy. It's all you,
Okay.
Ellie.
Perfect. So before we kick off, right? Some of you may know me, some of you may not. So me and PB we've been working together and training together for almost 2 years now. And it made me really happy when he was talking about runners because we have a joke right now where PB will text me like, "Bro, you should have yelled at me to hold runners." And one last thing I'll comment is the idea of longevity in trading, right? You need to remove from your mind that trading is all about getting rich quick, right? If I make X amount of money, that I'm going to quit my job. No. Like I want to be trading when I'm 80 years old in my PJs with a Neuralink in my brain. That's how long I want to be trading for. So what we're going to do today is we're going to go over A+ entries and exits. So I'm going to share my screen. As PB did, I don't like PowerPoints, right? I think PowerPoints are boring. We're not in college, okay? We're not in high school. We want to learn real practical stuff, and we're going to go over it. So let me share my screen and we will kick it off. That's right. You guys been blowing up the chat, which I love. So let me just get all this out of the way. Let me get chat. Boom. Okay. So let's start with this. So the title of this lesson, right, is how to hit multi-baggers in the A+ entry, right? What is a multi-bagger? A multi-bagger is when your contracts go 100, 200, 300, 400%, right? That's the trades you want to hit. If you have a small account, right, one multi-bagger, you're really going to start growing it. But the thing is, you have to understand with multi-baggers is the patience aspect of it, right? It's not going to be every week. It's not going to be every day. But when you can find those setups, right? We did a pop-up class on Friday. We called it house money, right? We're not making 5, 10K off these trades, right? We're making down payments on houses, right? That's kind of the joke we made. Now, honestly, we're not going to clear 150K on trades, right? But I thought that was funny. So let's talk about trading theory, okay? Trading theory. So what is trading, right? What is it? It's all about finding areas of imbalances or inefficiencies. And what do I mean by that, right? Price always has to come to an area or either bulls win or bears win, right? And if price is at a certain level, say 500 on SPY, right? It's just balance, right? There's enough bulls, there's enough bears, and then we chop, right? In order to make money in options, we need volatility, we need IB expansion, etc. So that's really all trading is, right? So how many times have you guys been in a trade, right? And everyone is bearish. Everyone's bearish. Your mom's texting you saying this is a piece of shit stock. Twitter's saying it's a scam, right? What happens? What happens to price? Price goes up, right? Why? It's because too many people are on one side of the trade, right? Everyone's on the one side of the trade. It always does the opposite. I've seen it time and time and time again, right? Same thing goes for bulls, right? Everyone thinks NVIDIA is going to go to 10,000, right? And then maybe one day it doesn't, right? SMCI is supposed to go to 10K, and then it collapsed like $300 a share one day, right? And price goes down, right? And this is what we talk about when we're talking about imbalances or inefficiencies, right? You can't have everyone bearish all the time. You can't have everyone bullish all the time, right? You have to find the zone where bulls and bears get tired, right? And things start to reverse, right? So how do we find sleepy bears, right? Like then hibernations, bear season actually ends here in the springtime, right? Or sleepy bulls, right? How do we find that? And we're going to cover that. So let's talk about simple mistakes new traders make every day, right? So I taught at this rate, between me and PB, probably 100, 200, 300, 400, almost 1,000 traders, right? Of how to trade, right? I have people come into my Discord, I have people DM me. I'm always open and trying to help new traders. And I see the same thing over and over again, and it drives me crazy, right? So simple mistakes new traders make every day. Chasing, right? They see a stock go to the absolute moon, they buy calls, and as soon as they buy calls, stock goes down and they lose money, right? Traders are oversized, right? So they've been getting beat up in the market, right? So they decide, okay, I'm just going to go all in this play and hopefully I make it all back. That is wrong. Number 3, if any of you have followed me for years now at this point, right? Fighting the trend. When the trend is going up and to the right, we're going to play up and to the right, right? We're not going to try to come in here and buy puts for a 10% scalp when I could buy SPX and ride them all day and LOL at bears, right? And then next is no defined risk, right? You're just randomly buying, right? You ask me, right? Oh, can I get in now? No, you can't because you don't have a defined risk. You're just slapping and guessing. And then lastly, what will we fix today in about an hour, right? So my lesson today is planned for about 30 minutes or so, give or take. What we're going to fix is we're going to fix all these things, right? We're going to fix every single one of these things. Starting tomorrow, you will be a completely different trader after this lesson. I guarantee you it. And if you're not, I don't know, call HR. Okay, so let's first go over some basic candlestick patterns. All right, so we all know what basic candlestick patterns are, right? We have bull flags and we have bear flags. Why is it a bull flag, right? Because we get an impulse move. So this candle here is called an impulse move, right? So stocks make a huge move, okay? And then we start to consolidate and then to just break out and go higher. It's called a bull flag because bullish means up. Very, very straightforward. And then for a bear flag, okay, we have our impulse move, right? Our big red candle. We get our consolidation, and then we break down below, right? Everyone can understand a bull flag and a bear flag. It's very, very easy to understand. Now, let's look at some examples here. So we're going to look at AMD. AMD. So what kind of setup is this on AMD? Type in the chat. What kind of setup is this? Right here. Let me switch over to the... What kind of setup is this? It's a bull flag, right? Okay. And then what happened once the bull flag broke? We went to the moon. I even date stamped this so you can go back and back test this. Okay, so here's our bull flag. Now, is it as pretty as our drawing? No, but that's just the nature of the business. But here's our bull flag. We could even draw our line here and it breaks to the upside. Next, we're going to look at SPY here. Okay, what kind of setup is this? What kind of setup is this? It's a bull flag, right? Bull flag. So what are we going to do here? If we think this is a bull flag, what are we going to do? We're going to buy what? We're going to buy calls, right? We're going to buy calls. All right. So what happened? What happened? Price went down. But Ellie, you just went over, if it's a bull flag, stock's going to go up, right? You're going to buy hella calls. You can go all in, right? Like, well, after this lesson, like you just saw bull flags, right? We're going to go up. But what happened? What happened? Yeah, you're bagged, right? You're pissed. You're going to call your local furu, right? Be like, yo, you told me to buy calls, like, because of, X, Y, and Z, and you just lost a shit ton of money. What if I told you it's not a bull flag? This is not a bull flag. This is not a bull flag. This does not meet the definition of a bull flag. What if I told you that? Would you believe me? Would you believe me? It's called cap. What do you think? It's not a bull flag. So let's go. Let's go over here and let's talk about what the heck happened, LED. So today's lesson is all about retest, okay? A retest. So here is how I approach pre-market every single day, right? So titles this is what the heck happened, LED. All right. So every morning I have a script that's in our Discord. It's free if you want it. That will literally mark your pre-market highs, your prior day's lows, and your pre-market lows as well. So this is automatic. So every morning I come in here and I want to see where the pre-market highs are, where we closed yesterday, right? The pre-market lows, right? This should be part of your morning prep every single day. If you don't do this, you can't make a trade, right? One thing PP talked about is if you don't have a plan, right? You don't know your setups, right? There is no trades, no matter what you do. So here are my levels. Now, let's break down the price action here. So what happened? What do we notice if we were to break this down? Okay, so this is how I would analyze something like this. So first off, we can see SPY, okay, broke below, well, actually opened below prior day low. Is that bullish or bearish? If a stock opens below the previous day low, is that bullish or bearish? That is correct. That is bearish. Okay, bearish. Now, what if price breaks below the pre-market low? Is that bullish or is that bearish? That's bearish. So by looking at this price action, we can assume that the trend and the action is both what? Bearish. That is correct. Okay, very simple so far, right? We're breaking the pivots to the downside. Below previous day low is bearish. Below pre-market low is also bearish, right? The trend is down. Don't buy calls here. Okay, so does anyone recognize this bull flag that we had previously? This looks awfully familiar to another bull flag we looked at earlier. Does it not? Is this not? Here's our impulse move. Okay, here's our flag. Right? Does this look awfully familiar? Right? So you're a sophisticated trader. So if you want to go over here, right, we can see this is the exact same setup as the one we're going over. It's just I used a replay feature to hide what happens next. So we can see here, right? This is a bull flag, right? It's a bull flag. Right? New traders come to me, they're like, yo, it's a bull flag. I'm going long. And I want to stop them and say, hey, where are we on the chart? Where are we on the chart? This is a retest of the pre-market low. Okay, this is what we call a bull trap. I'll put a BT. It's a bull trap. Okay, traders come in here and think the price is going to reverse, but we do not reclaim any meaningful level. It means nothing. Yes, exactly. This is resistance. This is support turning into resistance. Doesn't matter if this is a 5-minute chart, by the way. On a 5-minute chart, this is a bull flag, right? Doesn't means nothing. It means nothing. Look at the levels and where they are. So let's play the game and see. Let's see what happened. It went nuclear to the downside. Okay, here's our fake bull flag, right? Obviously looks like a bull flag, right? And all the noob traders came in, they're like, we're going to reverse. Some fruits are going to reverse, only to get absolutely clapped, right? You got clapped. This is a retest of the pre-market low, right? Doesn't matter if it's a bull flag. Doesn't matter. None of that matters. Look where price action is coming to, right? This is an A+ entry. Why? Because all the noob traders see a bull flag. I see a pre-market low retest, right? There's also a doji here. I've done plenty of lessons on dojis, right? Everything's pointing bearish here. There is no long, right? So what do? We come in here. We're going to short. Our risk is going to be pre-market low. Technically, your risk would actually be up here, the top of the quote-unquote flag, right? And you take this short. So I wanted to show this example of how traders fall into this bull flag trap, but in reality, yes, these are all 5-minute charts, right? But in reality, right, it's not. It's a trap. So let's actually talk about in more detail of a retest and how it actually works, okay? So what is a retest? So this is the LED definition, right? So for those who've been trading with me for months and years, right, I kind of like do things a little bit differently, right? Like I kind of make really complicated trading terms. Like when people use these crazy, like the term models and just these crazy terminology, I break it down to literally can a fifth grader understand it? Because to be honest with you, trading, right, you don't have to be the smartest person in the room. Anyone who thinks they're the smartest person in the room probably doesn't make money. So what is a retest? It's when price touches, right, touches, dribbles, or slowly moves towards a level only to be violently reversed, right? And what is this dribble? What is this slow moving, right? It's just consolidation. So let's go over an example of a bullish retest, right? So here is our classic example of what we drew earlier, right? We have our impulse move, right? And what happens? Price breaks above that pre-market high, right? I'm not really interested in entering this until it pulls back and retests the pre-market high to then take it long, right? This is an A+ entry, okay? This is an A+ entry, okay? You can see price shoots up, breaks pre-market high, slow. This is our slow baby dribble, and then goes higher. Here's a bearish retest. Here's the exact SPY example we did. Price breaks below pre-market lows, slowly dribbles up, and then rejects and comes down. Now, this can also work on bullish setups, right? So here's actually another example. So this is, I believe it's A and B, if I'm not mistaken, right? What do we notice about this chart on A and B? I believe it's A and B. I just tell us the price. What do we notice about this? Let's break down the price action, right? Let's follow the trading plan. What do we notice? It broke above pre-market high. Okay. So all things held equal, right? We call it ceteris paribus. If anyone's ever taken a finance class before, right? All things held equal, right? If it's above pre-market high, what does that tell us the direction? Is the stock going to keep going up or is the stock going to go down? It's bullish, okay? Does anyone notice anything particular about this little wick in this area here? Anyone notice about this wick here? Hella long, hammer. What about this wick? No, this wick comes down and taps the pre-market high. Literally, if I zoom in, you can see, what is that? Barely even a pin stroke, okay, off the pre-market high. So what do we think happened to the price action after this? What do we think happened? Came down, retested it, flagged. What do you think is going to happen? Rips, all caps. Good job, Vincent. We're going to the moon. Okay. Okay. How much you think on, I think this, I forget what day of the week this was. How much you think on contracts from here to here? How much do you think they paid? How much do you think contracts paid from here to, we'll say here? How much do you think they paid? You think you had a good day in the market? 60%, 300%, a lot, LOL. Yeah. You think you got paid? Multi-bagger? If you hit a trade like this, you're going to call your mom and be like, yo, bills are paid, right? Grocery bills paid, right? Your wife, kids, right? Hey, you're going to go to school, right? Yeah, exactly, right? And that's when we talk about the longevity aspect of trading, right? Is like you hit a trade like this, like I'm done for the day. Like this is an anomaly move. Like we just made fat racks. I'm gonna go chill. Like, like I'm gonna go make some memes on the internet, right? So someone asked where would I enter, right? The entry is this pre-market high retest. This is your highest, this little zone right here is your highest probability entry. Okay. This is as close to A++ it can possibly get, right? Up here, right, in this flag, I would give this like an A. The A++ is right at the retest of the pre-market high, right? So now let's actually break it down into a further level. So I thought this would be interesting, right? To kind of see like how would a new trader versus a pro trader approach this, right? There used to be this show on I think it was like Spike TV. It was like pros versus Joes, right? Right? There's like pros versus Joes, like be like a professional football player versus like some dude who played in high school who now he does is drink Bud Light, right? So I thought it'd be funny to kind of go through this. It's going to be a little bit of a satire, but what I found is, from coaching so many traders over the years, where if I break it down in a satirical way, they remember it more, right? It adds a little bit of emotion to it, right? Someone said that was a good show. That's a great show. That and Deadliest Warrior, whatever that is. That like the samurai. Okay, we're getting too distracted here. But so here's a new trader, right? A new trader sees a bull flag, right? So they're like, oh shit, like this, this candle here, right? Like, oh shit, we're going to the moon, right? Like we're going to the moon. So what do? They come in and enter. You can see I even drew the entry on this candle because like now we're definitely going to keep going up, right? We're definitely going to keep going up. And then what happens? Price pulls back the slightest bit and they somehow bought the high of the bull flag. They're stopped out. They're stopped out. Only for the stock to do exactly what they thought. And now they are sad, right? They go on Twitter, they find a local furu, they comment like, screw you, scumbag, right? Like they get all emotional, all upset. All they had to do is wait for the retest of the pre-market high, right? All they had to do, okay? But no, you want to buy the top and you get bagged. That's what you get, right? So what happens to options, right? So we do a class in the mastermind about there's certain ways I look at the options chain. There's actually an edge in the options chain itself, but we've been maxed out, but I don't want to get too much into it. So what happens to options here, right? So there's a term called IB expansion, right? That means that because this move is so violent, right? IB expansion, the contracts also move violent because of implied volatility. So you get that, right? Simpler terms, premiums go nutty, okay? We all understand what something going nutty is, right? We're a little cuckoo, right? It's like, this is when you go, wow, I somehow made 200% on this trade. Like, okay, we just take that, right? What else happens? Everyone makes money but you, right? How many times you take this kind of entry, only for the stock to rip, you're already stopped out and everyone's posting on Twitter about how they hit Tesla for 100%. You're like, I was in that. Like, what happened, right? Everyone makes money but you, right? So lastly, on a move like this, what happens? What do you feel? What emotion do you feel? It begins with an F and it has 3 letters afterwards. It's not a curse word. Before I digress. All right. FOMO. FOMO. You have FOMO. You're like, everyone's making money, but I'm not making money. Right? You feel frustrated. And trading, you never want to feel frustrated. PB alluded to this, right? About the calmness of trading. Like, if you hear me and PP trade together, like we're half the time we're shooting the shit and cracking jokes. And the other time, like when our runners are going crazy, like we're just laughing, right? It should be fun and stress free. You should not be stressed out. You should not be freaking out. Okay. So what happens here, right? So we kind of went over kind of the 4 bads, right? And all you had to do is just wait for a slight pullback. Okay. Now let's look at a pro trader, right? Let's break this down. So this is how I would approach it, right? So I've been trading now for years, literally years. I've been doing this. Okay. So what do we see? We see this huge money candle, right? A green goblin candle or a dildo candle, depending if you're over the age of 18 or not. But so what we're going to do, right, is you're going to wait for the pullback, right? I'm not interested in touching a single options contract on this, right? I get excited when I see a candle like this because that means that there's volume behind a trade, right? There's a breakout, right? And that means I can get active, right? So what are we going to do? We're going to wait for the pullback, right? Keyword is wait, okay? Over here, the new trader has FOMO, okay? So we're going to wait. So many times traders do not have the patience for the play to actually play out. I am the most patient person in the world when it comes to trading because if I get a setup like this, right? I see it pull back, right to pre-market high. I'm going to take my starters and start to size up to full, okay? I'm going to take 10 contracts, 100 contracts, whatever you feel comfortable with, right? Your one contract, if you're on a smaller account, right? I'm going to slowly start scaling in. Why am I scaling out? Scaling in? Because I don't want to be full boat if this breaks to the downside. And then we finally get our confirmation of the bull flag breakout, and then we're going to add the rest of our contracts, right? And what happens on this candle, right? Me and PB got matching Urises, right? He has the green one, I have the gold one. We got matching Lambos. We're laughing the money bill. right? And what happens? The move starts to slow down. What do? We literally just rinse and repeat the same process literally until this move doesn't end. If a stock's breaking out, there's going to be multiple opportunities for stocks to keep going. Why is that? Right? Because you have to understand the idea of trading in theory. Balance, imbalances, inefficiencies, right? If a stock keeps breaking out, there's going to be multiple entries. So everyone who sees the breakout can meet the parameters, right? Price comes to an agreed upon area in order for it to continue to keep going up. That's why there's no FOMO. You know there will be an entry for you. Now, I want to talk about the bearish version. So this is the bearish version. Okay. This is the bearish version, right? Same idea. We see the big green gulag candle, red gulag candle. We wait for the pullback. We're scaling in, adding the rest in the breakout. We LOL because now we got matching Lambos. It forms another bear flag, and we're just going to rinse and repeat this all the way until we have a nice fat green day. Okay? Now, so we are back to our original play we talked about, right? When everyone in the chat was typing bull flag all caps, right? They're like, oh, I got this. LED is not going to teach me anything, right? It's a bull flag. We're going up, right? We're going up. Only for you to be wrong, okay? And then all we did is retest the pre-market low, right? So we see this is our impulse move here, okay? Give or take. We could talk about higher time frames, but maybe later this week, right? Here's our bull flag, okay? Your entry, okay? And then you're going to ride it out until you get your matching Lambos, eventually stopped out, and then you're going to rinse and repeat this. So, how do I know when to hold? Right? Like, how do I learn how to hold more runners and things like that? Right? Like, I want to be able to hold multi-baggers. Go to my Twitter feed. I posted 300, 400, 500 percenters, right? Knowing how to hold, it's for another time. We can cover that. But I think this is a good lesson on how to actually trade appropriately, how to find A+ entries. And also, if you watch this recording, you'll know how to slow things down, right? Slow down your trading. It's not a rush to make money. So that is all I have. Hopefully you guys all thought this was informative and was good. And yeah, PB, thanks as always for having me, and I'll kick it back to you.
Sick. And don't worry, guys. Still have a little bit I want to talk about, but yeah, let me share my screen real quick and let's talk for a little bit longer. And then, yeah, there we go. 1 second. Okay. Okay, guys. So as a reminder, when you start trading, it's all about consistency and hitting base hits. Like I took 1K to 25K in the summer. It wasn't from every single day full porting my account and getting 500% trades. As a matter of fact, I never actually went heavier than 20% of my account in a single position. And that was only when I had $1,000 in the account. One of the best traders told me this. He said, if you want to make real money trading, what you need to do is keep adding up your base hits. And by adding up your base hits,